SanDisk. You've probably already seen or heard of the brand when you go to Best Buy or Walmart looking for a memory card for your camera. But what do they have to do with AI, and why are so many people investing in it all of a sudden? With some people even going as far as saying it's the next NVIDIA. As you may imagine, this has all to do with storage. Here's everything you need to know about SanDisk and its relation to the AI industry. So what is SanDisk? SanDisk is a designer and manufacturer of NAND flash memory and enterprise solid-state drives. NAND is basically a category of non-volatile memory, which means it retains data without power. It is used for USB drives, laptops, smartphones, automotive systems, but also it's used in data centers. This type of storage is key for data centers and AI because AI workloads require dramatically more storage capacity than traditional computing. So why is this type of storage now all of a sudden so much in demand? It's basically due to three main reasons. The first one is training. Modern models are trained on datasets ranging into the hundreds of petabytes. These datasets are read repeatedly across thousands of GPU hours and stored persistently between training runs. The second one is inference. This is the stage at which a deployed model responds to user queries. Inference generates large volumes of key value cache, which basically allows a model to process longer context windows without recomputing earlier tokens, and it is increasingly stored on flash memory rather than held in expensive DRAM. The third one is the rise of agentic AI. Today, agentic AI systems require persisting, larger scale memory access for real-time processing. All of this is to say that AI systems are more in need of storage than ever before, and this demand will likely continue to grow. So what's behind the recent rally in SanDisk stock? Catalyst was basically a NAND supply shortage that began emerging in 2025 and an acceleration in storage demand tied to the increasing AI infrastructure spending. So basically more AI spending and a shortage of NAND memory. To put this into context, for 2026, the data center segment is expected to become the largest market for NAND flash for the first time ever, overtaking traditional consumer markets like PCs and smartphones. SanDisk has even raised its own data center exabyte growth forecast to the high 60% range for 2026, up from the mid 40% range one quarter earlier. What's interesting is that SanDisk in its current form is barely a year old as a standalone public company. It separated from Western Digital in February 2025, and Western Digital retained hard disk drive business and SanDisk taking the NAND flash and SSD operations. At its market debut, the stock price near $36, and as of early May 2026, shares trade above $1,000. That's an increase of roughly 30 times the initial price. Additionally, revenue growth for SanDisk seems very promising. In their latest earnings report, they posted $5.95 billion in revenue for the quarter ended April 3rd, which is an increase of 97% from the previous quarter and 251% from the same period a year earlier. The trajectory, if sustained, would mark one of the steepest revenue ramps among large-cap semiconductor companies in recent years. Now, is this a sustainable growth? Well, let's take a look at the competitive landscape. The main competitors for this sector at the moment are Samsung, SK Hynix, Micron Technology, and Kioxia, which collectively control over 80% of the market. And then there's SanDisk. When comparing the technologies from these companies, SanDisk products are behind the leaders in terms of layer count, but they're better in terms of die capacity. These are some of the specs, and I'll explain what they mean after. SanDisk offers 218 layers in its current BiCS8 node versus Samsung's 286 layers and SK Hynix's 321 layers. However, as I said, SanDisk leads in die capacity with the industry's largest 2 terabit production chip, and its next generation 332-layer node is targeted for late 2027. Okay, so what does that mean? Layers and die capacity matter because basically they determine how much data can fit in a single chip and how cheaply that storage can be produced. So more layers means more memory cells stacked in the same physical footprint, while higher die capacity means each individual chip stores more bits. For data center customers, this translates directly into how many terabytes can be packed into a single solid-state drive, how much power that drive consumes, and how much physical space it occupies. This basically means that SanDisk offers more capacity in less layers, and they are planning to increase their layers for even higher demand AI systems. All of this sounds good. There's increasing demand for storage in AI, but what can we say about the future of the NAND market and SanDisk? The NAND market has historically alterned between shortage and oversupply oversupply, with prices and margins swinging accordingly. Although SanDisk long-term contracts are designed to combat volatility, their management has acknowledged that prior long-term agreements in the industry have not always held during downturns. In addition, if you believe that we are in an AI bubble that is close to bursting, then the risk is even higher, since a bubble bursting would make SanDisk stock drop along with most of the other AI stocks. For now, the data points to growth. Data center revenue is the fastest growing segment of the business, contract durations are lengthening, and price has held. The next test will arrive when industry-wide capacity expansions begin to take effect, when the new contract structures encounter their first downturn, and when the AI infrastructure spending plans of hyperscale customers either continue at current levels or begin to moderate. Until those points are reached, SanDisk remains one of the more closely watched stocks in both memory semiconductor segment and the broader AI infrastructure complex. So should you invest in SanDisk over other AI giants like NVIDIA or even an ETF? Well, that depends on if you believe SanDisk will be a durable infrastructure provider through multiple AI cycles, or whether the current results represent a peak driven by temporary supply constraints. NVIDIA and the major ETFs offer broader exposure across compute, networking, and software layers, with revenue streams that are less directly tied to a single commodity pricing curve. SanDisk, on the other hand, offers concentrated exposure to NAND flash pricing and AI storage demand specifically, which has produced outsized returns over the past year, but also leaves the stock more sensitive to a memory market downturn. For context, the broader memory and storage sector has rallied alongside SanDisk, though not always at the same magnitude. Western Digital, for example, the company SanDisk spun off from, trades near $435, more than 150% higher year-to-date in 2026, driven by its hard disk drive business serving the same AI data center build-out. Another example, Micron Technology, the only US-based NAND manufacturer, has posted year-over-year revenue growth above 50% and benefits from exposure to both NAND flash and high-bandwidth DRAM, which is the memory most directly tied to NVIDIA's AI accelerators. Another relevant one is Kioxia Holdings, SanDisk's joint venture partner, listed publicly in Tokyo in late 2024 and has delivered a one-year return of roughly 1,900%, with operating margins reaching record levels of 24.5%. The comparison cuts in two directions. On one hand, the fact that SanDisk's closest manufacturing partner has produced returns of similar magnitude suggests that rally reflects sector-wide fundamentals rather than a SanDisk-specific story, which lends credibility to the structural demand thesis. On the other hand, it indicates that much of the AI storage premium is already priced into the entire NAND group, leaving less room for relative outperformance from this point forward. Investors weighing SanDisk against alternatives like Micron or Western Digital are essentially choosing between concentrated NAND exposure with the highest near-term earnings leverage, broader memory exposure that includes the high-bandwidth DRAM market, and hard disk drive exposure with steadier but slower growing revenue. Each of these options carries the same underlying AI infrastructure thesis, but with different sensitivities to the next turn in the memory cycle. If you like the AI memory sector, then you should keep a close eye on several specific data points over the coming quarters. Each of these can tell you if the demand is growing or if there's an oversupply. The first is quarterly NAND contract pricing. Contract prices are negotiated between suppliers and large buyers each quarter, and their trajectory is the most reliable indicator for memory company earnings. Industry trackers such as TrendForce publish these figures regularly, and any sustained decline would signal that the current cycle is approaching its peak before it shows up in the reported results. The second is capital expenditure guidance from the largest hyperscalers, which are Microsoft, Google, Amazon, and Meta. Together, these four account for the majority of AI infrastructure spending, and their quarterly commentary on data center build-out flows directly into NAND demand. Any signal of deceleration from this group would likely move the entire memory complex before fundamentals weaken. The third is supply-side announcements from major manufacturers. New fabrication capacity from the leading companies takes years to come online, but has the largest long-term influence on whether the current shortage persists or reverses into oversupply. The fourth is the rollout of SanDisk's next generation node in the second half of 2027 and the commercial progress of high bandwidth flash, the joint development with SK Hynix designed to compete with high bandwidth DRAM in AI inference workloads. Adoption of high bandwidth flash would expand SanDisk's addressable market into segments currently dominated by SK Hynix and Samsung. And finally, watch for any speculation around a potential merger between SanDisk and Kioxia. A merger would create the largest NAND manufacturer globally by bit production and would would have major implications for industry pricing power and competitive dynamics across the segment. What do you think? Are you investing in SanDisk?